All right. All right, let's get started. I think more people may trickle in. And again, we are recording this, so we'll have, for those who missed the beginning, I guess they wouldn't know right now, but we'll have the material saved. I think most people on this call probably know me, but for those who don't, I'm Sam Lesson. I'm one of the GPs at Slow. I'm here with the four Libermans. Very excited to have you guys all together, 4 of 9, who we're doing this kind of new form of financing with, which you guys should be aware of at a high level, where we're investing at Slow Ventures, we're leading a round of financing where we're investing not in their specific next company, but it's a family of entrepreneurs. And basically we're saying we're investing in everything you do for the next 30 years, right? Which is a pretty healthy chunk of hopefully everyone's careers. Although we hope we live much longer, but at least the very active period. So I'm going to start out. We kind of discussed. Well, here's the upshot. The upshot is this is a new form of investing. Everyone's intrigued by it that we've talked to, but everyone's also has a lot of questions about Libermans, about the structure, things like that. So we figured we just get everyone together, do a live Zoom, go through a bunch of kind of the basics, and then answer questions as a group. We're obviously happy to talk to anyone who's on this live or wants to touch us later one-on-one about what we're doing and the whole thing here. But it is important to us that we build a syndicate and a movement around this. And so we figured, getting everyone together, having the forum would make sense to start. So with that, I'll be quiet for a second. And do you guys want to go around for a second and just start out very basically, all 4 of you just introducing yourselves in, a few seconds, kind of where you guys are coming from and what you're up to now and things like that. High level intro.
Where we're coming from is the same.
Yeah, it's a tricky question.
Yeah, fair.
All
but
4 of you.
Everyone give kind of your spin on it.
Yeah. I think maybe we should start with introducing all 4 of us, and then every one of us will add up something in there.
Fine. Whatever. Let's do introductions. Anna, you want to start?
Yeah, I want to start with introducing all 4 of us. So basically, I'm Anna. There's my sister Maria and my 2 brothers, David and Daniil. We were born in Moscow, Russia, and where I happen to be at the moment, having a call at 7 p.m. I think you all kind of in different time zone. So we are all originally from Moscow, and we grew up in a family of neurobiologists, physicians, and spent a lot of time in our parents' lab. Seeing how our parents work together and how they are successful as scientists work together, we also build our way of interacting with each other and kind of working with each other, that then led us to joining forces further on in our lives. And as adults, we started to build businesses together. And when we all joined, we noticed how effective we become from just having each other in each other's life, not just in personal life, but also working together. And a little bit about our ventures. So we started building businesses in Russia, and the first business were built by David and Daniil. It was game development studio. The idea of the studio was to kind of revolutionize the way people think about gaming and build a new wave of MMO games. And the company unfortunately was not that successful, but it had very successful spin-off, which was a gamers community that then was sold by brothers to a company called Rumbler, which is like a Yahoo of Russia, for $4 million. After that, all 4 of us together formed animation studio that created big projects in Russia. We worked for major broadcast network here, and we built award-winning show. And the main feature about our studio was that we could produce content much faster and much more efficient, money-wise and the production-wise, than anyone in the world at that moment. And still, if we look at what's produced now, we still feel that we are one of the best since that time. And after this animation studio, we moved to the United States with our further projects. And in the United States, we built several projects, and we ended up selling one of our ventures to Snap Inc., which is owner of Snapchat. And the deal was around $60 million. And we just ended this 4-year journey with Snap. And now we're ready to kick off with lots of our ideas that we will introduce you a little bit during this call, and mostly introduce you to this idea of investing not in particular venture of ours, but in many ventures that we have ahead of us. And this way, I'm introducing you to my other siblings. Who wants to go next?
That was excellent.
I can add to all this on the thing that I'm the oldest sister in this company, and I was probably like the most unsure about joining the forces in the first place. But 16 years later, I can be happier.
Fair enough.
I would usually add that the story sounds boring without all the additions of us having presentations in the Russian parliament, meeting with Dalai Lama, who then introduced us to people in Hollywood and stuff. But we'll make it shorter this time.
So, and I'm David. So I'm the youngest one from these 4, but not the youngest one from the 9, with 1 more.
That's who we are.
Yep.
Fair enough. So it's great. So talk to us a little bit, like, you guys obviously have had a successful exit, right, to Snap Inc. that, you know, is notable and have played senior roles there, right, as well as have done the entrepreneurial journey a few times now in different forms. Why do it this way, right? Like, you obviously go out and raise company money for the next company. Why instead do this kind of reasonably novel structure where you're asking for investment in everything, right, over the next 30 years?
Let me probably take that. So surely there is not a single reason, right? We all see multiple benefits in this decision. And we all not necessarily prioritize them equally. But then probably before brothers will jump into naming all these multiple benefits, I'll tell you about how it all started, under which circumstances we came up with this crazy idea of selling a fraction of our future earnings. So it happened last year when we finished the vesting on the sale of our previous company to Snapchat. As Anna mentioned, it was 4 years. We worked for Snapchat. We did some very fun, amazing stuff there. But this is like for the first time, November last year, we got together as usual for our team meetings, like twice a week we're having them at least, but for the first time in this new status. And we talk about, well, we have come to this point in our career, then we finally see success, see recognition and all that goes with it. After long 16 years when we have been moving, in fact, much slower than we wanted. Mostly overcoming barriers related to the sort of unprivileged circumstances of our start. Because Anna didn't mention all things that we've gone through, like collapse of Soviet Union, raising in a family of scientists at that time was absolutely like nothing compared to raising in a family of scientists here in the US. We were very poor, and after that we saw like a lot. So this time we all really wanted to move forward. We wanted to move forward together. We had no other thoughts about it, and we wanted to move forward faster. We wanted to move on our term to our next like unicorn or bigger moonshot, do a lot of experiments, iterate faster. Like we all were agree about that. So at that point, brothers came up with suggestion, like let us create a holding that will do all these experiments and iterating and invest most of our accumulated wealth into it. And Andy and I, we said like kind of, wait, no, we shouldn't risk everything that we've created like you guys, you're responsible for fundraising in this team. Go and raise external funds. Holding is a great idea, but let's find investors. And brothers continue arguing. They were saying kind of right thing that venture capital firms on this sort of early stage of startup, they can offer just a fraction of what we personally earn annually, which means if we take this money, it will be extremely ineffective use of our time and of our resource. They pointed to some prominent examples, like that other successful founders face the same barrier. This is how industry works. Like, for example, Elon Musk, after a string of extremely successful projects, after the PayPal acquisition, he wasn't able actually to find investors to start SpaceX and Tesla. And he ended up investing all of his wealth he built by then. And it brought us to pretty unpleasant but interesting conversation about okay, if we sisters, if we can't take risk like that in this industry, what does it mean? Should we retire? Should we, I don't know, do some angel investments instead, like many do? And if it's so, if it means that we are not capable, which you know is not true, something is definitely wrong with the industry. Because we can look at Elon Musk's co-founders. None of them took the same risk as he did. So it's probably some sort of trap. So brothers, they still continue pushing and pressing in that with what we earn annually, even if we lose all the money that we earned, we will recover in 2-3 years, the latest. But we were also we stood on our point, and we said, okay, let's then wait for this another 3 years. Let's go slower again, but let's not touch what we have earned, and let's wait till we double this time. And we said, yeah, you see, we can't borrow from our future. We all wish we could. And here I need to add some background that these were not just words for us. We actually have been thinking a lot about this, this problem of moving money from the future, where it needs to be saved, to the present, where it's so valuable. We were writing Medium articles. We were thinking a lot about how young people can actually borrow from their future to invest into their education today, thinking about some theories, etc. So we have been fascinated by this idea for very long, probably not so long as you, Sam, but really long. So, but only at that moment, last year, this idea struck us that we probably can pretty easily raise this sum we needed, which is equal to 1 to 2 years of what we earn annually, by selling a share of our future, meaning that we can raise what we need and we can continue chasing our dream side by side with investors who will be interested this time in all range of our successes, but without jeopardizing our financial security. And that we can probably not solve our own problem, but provide a fix for this short-term profit-driven system that only supports this long-term vision if it's inherited, if it inherited wealth or any personal risk.
Yeah, and I will say it's very interesting. As you guys know, we've been talking about this for a long time, and I kind of came to the same conclusions, earlier in my life about the problem, from, in some ways, almost exactly the opposite position, right? Which I was fortunate to be born into a family where we did have a lot of security. And I felt that allowed me to take more risks, right? And look for bigger opportunities that had nothing to do with my talent or even my risk tolerance. It was simply that my BATNA, right? My alternative was a lot of security, right? And that asymmetry, I think, is actually one of the hidden parts of Silicon Valley and great success. People talk about how wealth compounds, and that's true and things like that. But the real thing is that it's, especially in a world where no one really trusts the government to provide long-term good services, right? Everyone's kind of has to look out for themselves to some degree, right? In some ways that de-risking early, right, or that access to de-risking, the really biggest benefit is that it allows you to take more risk, if that makes sense.
Yeah, we saw this difference even between four of us. So yeah, it's really
exactly there. Yeah, for sure. So talk to me more about, like, I mean, or any of you guys want to add on to that? I mean, I think that's a pretty clear background on what we're talking about here, but yes, no?
In general, we see a lot of benefits in such structure. As Maria mentioned, this discussion happened in November. Since November, we were digging into this idea, and we had a conversation with multiple founders on different stages, on super early stage, or the founders who already created unicorns. And we saw that even though the reasoning for each of this founder would be a little bit different, but it's kind of the same.
Might be very different.
Might be very different, but it's kind of the same. On every stage, you want to move faster, and it's the barriers is still out there. And in also this notion, which we all love so much in our relationships, that relationship with four of us are super aligned. And we thought that if we want to build a relationship with investors with our next venture, we also wanted to be aligned. If some project should be stopped and we should start another one, we all want to be on the same page with all the partners, because we've seen in the past how it's happened. And in general, we believe that we would be able to build much greater relationship, got better support from the partners if we will be able to build such alignment.
Yeah.
Like,
and
yeah.
I would just say that that's a thing that obviously happens kind of casually in a lot of investor relationships, right? Where, you invest in one company and it either is working, it's not working, or even worse, it's working, but only a little bit, right? So you're not sure whether it's going to work or not, and there's a better idea. And in a lot of casual relationships, a founder might say, okay, I'm going to go work on this other idea if they're ready to, and ideally the investor doesn't pressure them to work on the thing they invested in, and maybe they kind of kick them some equity in the next thing. What you guys do is create, which I very much like, a alignment structure which formally, right, like aligns in a way that makes it sense for everyone. Everyone wants you guys to work on the biggest possible thing, which I think is exciting as you guys are working together. So happy to keep going on this. But the other thing, I've now had a bunch of conversations with people on the investor side, and investors get, I think, a lot of why this is interesting to them from a long-term alignment perspective as well, right? And also this idea that the future is very strange. And so this idea of, well, what do you want to bet on a long-term horizon? What do you want to invest in? The answer to me is very obvious, which is very talented people, right? Like that's the one thing that I don't know what's going to happen to the economy and 50 other things, but I do know that, talented people, I believe, will succeed, right? So that they get. I think the thing that people sometimes struggle with the most, and we've talked about a bunch in different forms, is, all right, how do you value this? Like what, this is kind of like a new structure, right? There's a bunch of risks for investors in this that are different than a traditional company. It's a very long-term structure. Can you guys, talk through a little bit, how you came up with the valuation you have and kind of the framework around that?
So we actually, we've done a lot of iteration on valuation model. So
first, it was like a super obvious one. What if we were a company? Could we be valued the same way how the companies are? And when we go IPO, will we have this PE multiplier comparable to the Googles and Facebooks of the world? And if it's there, would it work for us personally and for the investors as well? And then we go deeper and started researching the historical data. Basically, we took all the historical data from the last more than 20 years of the Silicon Valley, like technological venture-backed companies market.
And and try to build a model which will be kind of just based on data, and which will allow everyone to rely on it without them just believing in us, but just to use a framework which then, especially we wanted to build the framework which then can be used by not by only by us, but by others as well.
So the notion for us was, okay, the good investor going to be the one which will intuitively and historically, experientially understand in which founder to invest. But the setting for the valuation should be kind of based on the factual data.
Especially because it's a new type of assets, and definitely no one can be sure like how it will worked out eventually. That's why we use it, and we realize that, okay, with founders, it's a little bit more complicated than with funds, because with funds, you can kind of predict the probability of successes in the sizes of exits. And that would be enough. With founders, you also should include what is the probability of not successes, and how much time founder will spend on the companies which will not be successful, because it's your life and you will invest this time as well. So the model appeared to be a little bit more complicated, and we include all this data. What is the probability of us just building companies and then this company burst, and what are the probabilities of us building the companies which would be successful? And then we saw that this model can actually be quite, it can support the initial hypothesis of what kind of valuations can be expected. And the third thing which we've done, we actually approached multiple of founders, and we're trying what kind of valuation they will accept as a better model for them, in
rather than just raising for the single for their next startups one by one.
But in general, like, to simplify the model, in our case, we took our annual income, like averaged for the last 4 years. We also provide our IRS tax reports to investors so that they can be sure that this
is in fact factual data.
And then we say that for raising a sum which comparable to our annual income, for exchange of a share in this future. And right now it's around like 5% of our future in exchange for the sum which comparable to our annual income.
Cool. So that all makes sense. And again, like, I think the reality is, from my perspective as an investor, there's a bunch of ways to zero in on this. We also honestly don't know, right? Like, is the answer. And so we're trying to do something which works for everyone and we can justify. But I think, one of the hardest parts about investing in new asset classes or creating something new is, like, you do have to do some deals to start to figure out how these things actually play out, right? And so obviously, everyone who's on this call will be seeing this as a very accredited investor and a pretty experienced investor. I think everyone gets that, right? Which is you zero in as much as possible. And then we don't know, right? In certain ways.
In our case, it was also moving the same with the same direction. When we started talking to the founders, at some point when we realized that the conversations, each of the conversation comes to the point where people are saying, yes, this is a good idea, I probably will do it to myself. With some of them, we started offering right away, would you sell a share of your future right now to us? And 3 times in a row, when we got an answer yes, we actually offered that, and people actually agreed. And we actually invested in 3 founders. At this point, we realized, okay, this is working not only for us, but for others. And we should probably move on with that.
And also with these 3 deals, we were on the sides of investors. So we would personally like, how does it feel to invest in a person?
How is it comparable to what we are doing normally? Like, because last year alone, we probably invested in 40 companies. And this understanding of how it would work from the investors' perspective also helped a lot.
So this actually brings up 2 interesting points, some of which people are starting to ask about in the studies, and I want to call out both of them because I think one of them is a major risk area, I think, for us to figure out, and the other is kind of a really important question about what you're actually investing in. So on the risk factor side, you guys just mentioned you guys have been experimenting and doing this a little bit. My understanding is you guys have basically been doing these on like napkin contracts. Like they're not really formal, necessarily legal contracts as much as handshakes and a letter. This we're trying to do in a format, right, that is going to be legal and defendable and ideally repeatable, right, over time. And there are some risk factors associated with that, right, which I think we all acknowledge. Maybe not with you guys because there's a lot of trust around the table, but for the format we're creating, I'll just call out the biggest one is this is effectively being structured as a 30-year employment contract, right? Like you have your holding company, and Masha, please correct me if you feel differently, but like the question in my mind is like, it's not clear that those are technically legally binding, right, over this period of time, / we will have to test that, not necessarily with this investment, but if this becomes a thing, that will become an issue. Masha, you're talking, do you want to call out any other major, like, real question marks on structure here that I think are important for people to understand? Or do you just, if you disagree with my categorization, that's also fine.
Yes, I agree with you that this is probably the question which comes first. Is it enforceable, like, at all? We try to approach it, of course, like first with using as much of existing structures, existing approaches as possible. Which from on one point makes it closer, and this is why the risks are also closer, and another it makes it repeatable, as you said. So we go ahead with, for example, despite our initial idea, we eventually are going with preferred shares for investors instead of common shares. So in our case, and for founders sort of our tier with existing pretty high annual income, it would mean that investors are not participating in downside because we're raising like 15 millions, and their probability of us actually earning this 15 millions during the next 30 years is kind of 100%. So this is this thing on one hand, but it also provides some protection to investors.
Yeah. Although the thing I mentioned there, which I think again is another complexity, and I do want to get back to the more fundamental questions too, is your intention, which is going to be a little bit of a wild ride, right, is to actually go public very quickly, right, is the idea, right? This is the V1 of this is simply doing the financing, right? V2 is then actually attempting to take this vehicle public rapidly, which again, obviously would erase the preference stack, right? Everyone would flip to comment at that point, et cetera. I'm not sure that ends up mattering or not, but like, it's just a note to make to everyone on the call. Did you guys?
Yeah. V3 is making a new type of asset out of it, not only for us.
But in general, the idea here is that with ourselves, we're trying to make an example. That first, the legal document can be signed, and this legal document will be at least made in a way so that everyone can be comfortable with the way how it's structured. But also as you mentioned, we want to show that it can be as liquid as what's right now expected from normal companies. That's why we're setting a goal for ourselves to structure everything so that as fast as it's reasonable, we are going to make this company publicly tradable to show that actually this type of assets can become a liquid one. And definitely we would in the future see the examples which will prove or not prove that this structure is like enforceable, for example. But we also can already see some examples. For example, some funds already for several years investing in athletes.
Yep.
And some of these athletes was trying to prove in the court that these type of agreements are not enforceable, but court disagree. And what we believe is great about founders, that founders in general consider to be sophisticated actors. We all here are sophisticated actors in terms of our understanding of what we are committing to. That's why in general, we believe that the structure, at least when you invest in seasoned founders, should work.
And I'll just mention on top of that, I think for the broader idea, there are also other pieces that we're building into this, i.e. a floor that says like under a certain amount, the investors don't get a share, which might not matter in this case, but we believe matters more broadly for the industry to make sure this is never seen as taking advantage of people. This is something you can borrow from the ISA world, right? As well as kind of a few other key elements that we can get into for people that are interested. We can keep talking about this. I do want, because we have obviously limited time with everyone, to flip to another very pertinent question that's been asked, and I think also comes up from what you just mentioned, which is, okay, so what actually is in scope here and not in scope, right, of your business activities? Because one of the things we all know, right, is that in a group of founders that are smart people in Silicon Valley, it's not necessarily, I mean, your company might be successful or not, but you also, obviously, because you're well-known and building a brand in your own company, have access to deals, right? You're doing your own investing, like what business activities can be scoped in different ways. So do you want to talk through a little bit, like what's in scope and what's out of scope for this deal and how you came up with that and how we came up with that?
Yeah, so in general, like first is whenever we create next company, our share in this company will belong to the company which you invest in. So like you will have a share in this. But also all our investment in startups, in private companies, we will do through this structure. All advisory shares which we will receive actually would belong to this structure so that you will have a share in it as well. All RSUs, like if the company acquired and will get some separate RSU personally, we committing that these RSUs will also belong to the company.
Like a stock compensation of any sort.
All like tokens, NFTs, as we discussed.
they all goes in.
For the investor of the call, I made very sure that NFTs were included.
Yeah. Even though like initially it was like we never invested in art.
You were allowed to invest. No, you can't invest in art.
No, but what's not included is like real estate. In our case, it's not included. We were not real estate investors. We never invested real estate, but we consider to have some houses for ourselves and for our family. We don't include the growth of our wealth if it's invested in mutual funds or invested in funds as limited partners. So like passive investing is not included.
But passive investing are personal passive.
Yeah, like our if we invest our wealth.
If we invest our own cash on accounts instead of like compared to the holding structure.
Yeah.
Yes, that makes sense. Yeah, and so hopefully that answers some of the questions that have been posted in the Q&A. If anyone else has questions about that, let me know. But I think from my perspective, the point here, obviously, and at Slow Ventures, we're also doing this with creators, right? Which we're talking with you guys about as well, right? And there's this question of you just want to make sure that if you're trying to be aligned, you really are fully aligned, right? And I think there's no scenario. I think it's very difficult for a whole bunch of reasons to get into passive investing in 100% complete alignment. But I do think that for people who are interested, we've structured this in a way that like all the key components, I think are included. And I think everyone's on the same page about that. Cool. So Is there anything else you want to add, or I have a few other questions I can ask?
Yeah,
probably.
we see some questions
in the chat section.
First of all, like what opportunities excite us? So in general, we usually in general we usually would answer that we don't want to focus on like what we will create in the future, because now we want investors to be focused on like whether they believe in our like decision making and in the way how we think. But actually, one thing that's which was the start of this conversation, that we truly want to invest in projects which
invest ourselves, our time
into the projects which have much longer expected terms to the minimal viable products. So some really hard problems to solve. And one of the problem for our family,
the heritage which all four of us has is both of our parents are biophysicists who our dad started in 50s his journey into understanding how DNA works and how consciousness works. And by 80s, he already developed a sophisticated model of how quantum aspects works within every neuron, and how it actually makes each neuron basically a quantum state machine. And having all this knowledge, which was kind of inherited, we were observing and like researching what are the developments in the science in this area, in the area of quantum physics through the last 15 years. And we haven't seen much of the development until recently, when one by one more and more articles, scientific articles, started appearing in this field.
In quantum biology.
And quantum biology is what excites us most. We understand that if our parents were right, and right now we tend to believe that they were right, and based on the latest researches of multiple scientists in UC Santa Barbara, in MIT, in UCLA, and worldwide, that it is possible to build a molecular level quantum a simulation of what's going on in our cells, to basically build quantum computers which will work on room temperature conditions with a super
in the same way it's built in biology. But this type of projects, they like SpaceX. You need to invest dozens or like $100 million to actually
before the rocket landed.
Before the rocket landed, before the first project is ready. And one of the great motivation for us is to build Libermans Co in this type of structure, that we believe that it faster will enable us to actually work on the projects like that.
Fair enough. But I guess this brings up an interesting question that maybe you guys can respond to, which I think there's two different ways to think about, the structure here and the point of it. One is to do those types of moonshots where maybe in your careers, you will do one or two things, you know what I mean? Because there's such long lead time things. The other way to think about it is kind of more the rapid iteration model, right? It's almost like the incubator, the family incubator, if you want to call it, right? And where like you're churning out more companies faster, right? Some of them work, some of them don't, et cetera. Do you guys have, like the whole point obviously is for you to follow your instincts in the market and kind of where things are coming and make good decisions there. And like that would be investors trusting you to do that. But do you have a sense, that's obviously like pretty far from like the idea of like building platforms around this idea or anything like that, like how you'll start in the first few years or what types of, like how you'll kind of go through that process?
Yeah,
so as a matter of fact.
So we already started the platform. As soon as we applied this idea to ourselves, we immediately realized that this is a big business to build. We right now have a wait list of founders who want to be on board and who want to do the same.
And probably total valuation topping $10 billion.
So we believe that the platform by itself can be a huge success. Also, we right now already got several companies who wants to buy a product which we thought to build for B2B business, to sell it to startups, is to build a system which can analyze code and make engineers more efficient in terms of creating the performance apps.
We should also probably explain.
We should mention here that this family is crazy about efficiency, about making things faster, easier.
This all comes from us being super crazy about, a fanatic about the efficiency, especially code efficiency, and that's how at some point we get to producing animation faster than anyone in the world, using computer vision and using motion capture, and then writing lots of software which was making rendering more efficient and stuff like that. But then at Snap, that's what we've been doing through the last 3 years, and that's where we basically kind of started our career inside of Snap from when they acquired us. Evan's point of Evan's decision was about us being able to produce computer graphics and animation and AR together, and he wanted to combine this all to build 3D avatars, and that's what we did in the first half a year inside of the company. So we were very fast, and that's how we usually act. The
company expectation was that we'll build it in 2 years, and when we finished in 6 months, they're like, whoa. Yeah. No one is asking you to do it that fast, and we're like, what? You hired us, guys. You should think about it.
Finish that one, and then switch to what we saw as a much more crucial problems for the company, which at that point was, according to our analysis, was a really bad performance of Android application, which led to the decrease in audience and stopping growth and stuff like that. So as soon as we focused on that, we spent the next year and a half basically recreating the engineering culture inside of Snap and introducing new ways of looking on how to analyze efficiency of the code.
And we see a great demand for such product, and we see how it can be productized and provided to companies to kind of analyze what their engineers are doing.
I see the question.
Fair enough.
And I answer it right away. So there are at least 4 people from Snap who already want to invest. And Evan himself said that he would love to invest if the board of directors will allow him, because it's kind of you investing in everything we create, and something which we create might be the competition to Snapchat, and therefore it's kind of him investing in the direct competition. But I guess he will figure it out.
But for exec level people from Snap investing in the structure already.
Yeah, like the head of AR platform would invest in us. The VP of strategy planning on investing in us, and some more people from Snap actually want to invest in us as well.
Excellent, cool. Do we have more questions in the chat or things like that?
Yeah, we have another question. Can we just sell you guys as NFT? So we actually the long-term vision that definitely such assets should be tokenized. But the problem of current systems that you actually cannot really attach anything to the future profit, anything real to the tokens in the state. And we want to be in the States. We believe that this ecosystem.
We want to work in the United States.
Yeah, that's why tokens are kind of more long-term. But our idea to actually make our holding publicly tradable is also like a step towards actually a tokenization, which would be.
I mean, it is basically just a token. It's an old school token.
Yeah, it's an old
school token that's much more expensive to set up. I mean, I'll chime in here for a second, because obviously I've been following this very closely. I mean, the thing that I think is the important lead here is the income tie, right? It's not the idea of like having a tracking token or a trading card on the Libermans, or kind of like what you're seeing people mess around with in NFTs. I do think that there are 2 major trends which make doing this now versus 20 years ago far more appealing. And one is ISAs, right? Which is basically a very short-term capped version of this. I personally do not believe the ISA model is ideal. Am I still here or did I lose you guys? I can't tell for the video.
We can hear
We hear
Good.
you.
Not now anymore.
Not anymore.
Oh, Maria's stuck.
I think we're all lost now.
Do you see me? I feel like no one can hear me.
Sam, microphone? Yeah.
Am I back now?
Yes.
Okay, good. I don't know what happened there. I was saying one is the context of ISAs, right? Income share agreements for coding boot camps in schools, which again, 20 years ago, people did not think was a good idea, but has become very relevant, especially for aligning incentives between schools, right? And students in a short-term basis. These are a few years, they're very capped. They're effectively a modified debt instrument versus a real equity instrument, but it kind of opens up the door to people thinking about this stuff. And I think also what's going on in the crypto world with kind of quote unquote social tokens, et cetera. I mean, they're toys right now, right? They're not real because there's no, there's no income tied to them. There's no real value tied to them. It's basically based purely on speculation. Not something I'm averse to, just very different than this idea. I do think, though, that doing this with the Libermans and this pattern where we can ideally establish that this can be income linked, right, or value linked directly, and it can kind of have that fundamental underpinning. Ideally, this will kind of make its way back into crypto, right, and a bunch of other things once it's established. But like anything in crypto, the biggest problem is the quote unquote oracle problem, which is how do you kind of map the virtual world to the physical world, and in this case, like to real income is the way I would think about it. Do you guys, I mean, I assume you agree with that, but if you have other points on that, let me know.
I agree with that. In general, like our vision for the future, that this type of a model would be accessible for everybody.
General public, not only founders, but everyone who understands that tackling into their future might provide them the capital necessary for them to move faster and achieve better results in their future.
And we believe that in general, it should remove a lot of barriers which exist right now. And I would say that for younger generation right now, it's even more barriers because of the way how the financial system was structured 30, 40 years ago. But this type of tool, we actually believe can be transformational and can actually enable a lot of young people to actually move faster, achieve more, and to actually not stuck in the stages of their development, which and
I think really importantly, take more risks. I think the reality is, again, like capacity for risk is probably the #1 barrier to success in many cases, right? And our kind of backloaded social security system, which no one even really trusts, right, does not provide the security it's supposed to in terms of people being willing to take risks in their career or have access to the capital to grow faster. So in some ways, this is a weird form of private UBI, right, that's linked to ability and all other things in like a weird way. If that's kind of an analogy that makes sense for some people on the call.
Do have this analogy in our heads. We actually believe that this tool can solve at least 95% of what UBI is trying to solve, but to solve it better.
To solve it with market mechanisms rather than giving up it to someone's like some politician's decision, which definitely going to be.
Yeah, I mean, if we want to get into we can skip the politics for now, but the biggest challenge to this model, long-term, big picture in my mind, is it will just drive eventually more inequality, right? And the reason is it'll be much more meritocratic versus anything else, but it will still be inequality, right? Because all of a sudden what you'll say is, okay, if you're very talented or do well and score well on school exams or whatever, you'll get access to way cheaper money, right? In certain forms early on in life. And that capital will create more security for you, which will allow you to blah, blah, blah. So there are some challenges I want to acknowledge in terms of the distant future, but there's also a huge number of problems this solves, right, for people. And I think creates a more meritocratic society. So I believe it's on net good.
What also the risk which can be taken with this system is actually on every stage. Like for the seasoned entrepreneurs, this is also an ability to tackle to something which is inaccessible and achievable right now, for us to move on into a more capital intensive, heavy capital industries and rebuild them all.
So
Yeah.
Well, let's also face it. We all. It's also the question of what we are able to focus on our attention on, right? It's one thing you raise funds for every single venture you build, and another thing is we build it with investors. They trust in us, right? And we invest our time in targeting our audience, in thinking about what our client needs, and things like that.
Yeah. And so I'll share some closing thoughts, and then again, I don't want to take people's time. It's the beginning of the morning. There are things to do, and I appreciate you guys taking this time. I think having this with some people will be helpful to get these ideas out there all at once, rather than kind of some of the conversations we've been having. From my perspective, just super high level, this structure makes a ton of sense for investors, because especially as the world gets more discontinuous and weirder, the thing that I, as a long-term investor, want to be indexed with is the smartest people. And I don't want to have to bet on specific ideas and Like, I'd actually rather be indexed with the smartest people and call it a day, right? So I do think that's only going to be more true over time, as again, outcomes get more discontinuous. You don't want to be specific resources, and things get stranger, right? From a Liberman Co perspective, I think what you're hearing is that at Slow Ventures and this team, we're all very aligned that this is a very important structure to build for the future. But these guys also have a use for the capital, right? From the personal lives perspectives, and kind of what they're coming at it in terms of how they want to work, and they're kind of evening out their risk proclivities, but wanting to work as a team, right? In the next coming years, they're very generative, right? We believe that this is a good investment, to make. Right. And we believe it's an important one, that they'll be able to leverage well to create a lot of wealth and value for everyone. The risk factors are, it hasn't been done before. I mean, from my perspective, there are structure risks. Like, we're doing the best we can. We have very fancy lawyers. I'm paying them lots of bills. I'm sure you guys are paying your lawyers too, making sure we get this right, because we want it to be right. But we're working hard on that. And then the other big risk, which I wanted to call out, is the Libermans have done a bunch of work, which I'd be happy to share with. So can we share kind of my perspective and my work? But is how we price these things, right? Which is we don't really know, right? We have I think, and I don't want to discredit the work they've done. I think they've done good work, and I think we think their valuation is fair and the way we're approaching it. But I just think those are the two big risks. Is there's not 1,000 of these that have been done before. So we know what a Series A company looks like and how to price it and what the outcomes are. There's a lot of questions there, but in my mind, that's what venture capital is for, right? Is for taking these types of leaps and figuring these things out. And I personally just say in closing, I'm very excited to work with you guys on this and bring it across the line.
And to travel deeper into the West.
Deeper into the West. You guys, in the last few minutes, do you guys want to just, share any final thoughts, follow-ups, whatever?
Final thoughts. In general, as we move further and further, we at every stage we always have this thought. Maybe we just launched in another company. Maybe we just should raise to this company, and why we should limit ourselves in the future. But actually, every time when we get this idea, we clearly see that this type of the model can not only help us, but can actually increase the market significantly,
the size
of the market, and enable so many of the founders which we know, which we support, and those we haven't met yet. And that's why we keep moving in this direction, and we are going to enable many founders together.
Excellent.
Yes, as effective family, we want effective way of investing and effectively investing in very talented people.
Great. Well, look, we'll leave it there. We have, obviously quite a few commitments for people to do this. I think for, and kind of get involved. again, you wouldn't be on this call or seeing this if you weren't an accredited and very sophisticated investor who can think about these things and all the risk factors associated with them. And there are many, but I think obviously like we've reached out to people we think would be awesome to have included in kind of this first version of this, both because we think it's a good financial deal and because we think it's incredibly interesting, if you didn't pick up on that. So yeah, please reach out to me or the Libermans with any other questions. Again, the other thing I'll just note is, because this is the first time we're doing something like this, I'd say we're exploring what the questions people have are and like how to answer them and make sure we have them all buttoned up. And this is as much research as is also like we want to make sure we have all the questions. So I don't know, let's keep the conversation going and hopefully go from there. But I appreciate everyone joining today.